Hey, happy June, everybody, and welcome to this month's edition of my monthly moment. And I have some things to talk about, some things that are a little bit of a concern, something to be aware of. But in the meantime, we had another Fed speech today, and as expected, Fed Chair Powell said he's not going to lower rates. You'll remember in these past videos, I've been saying we really don't think he's going to lower them much, if at all, this year. And sure enough, now he said probably one rate cut towards the end of the year. And honestly, at this point, I don't think it's going to be a big deal as it relates to the market, because everybody's kind of already expecting what's going to happen. So there's probably not going to be any big surprises, but we'll keep you posted on that. Maybe as we get closer to the election, there might be one and possibly two, but we'll keep you posted. So the real concern right now for me is the markets have been doing really well. I mean, obviously that's not a concern. We like that, but they've been a little bit bumpy. But my thing that I'm looking at most, and if I've seen you recently, you've heard me say this, credit card debt. I talked about it in one video not too long ago, but credit card debt was at $1 trillion at the beginning of this year, and now it's at 1.2 trillion. So it took forever to get to $1 trillion and only half a year to get 20% higher. Now that's a concern also, because so much of that credit card debt is on necessities. It's not like people are buying things they want or going on trips or upgrading computers or whatever. They're not doing luxuries. They're not doing things that are choices. They're actually buying food on credit card. And I'm sure a lot of you are in the same situation where you're at the point now, because things are so expensive, you have to use those credit cards maybe a little more than you'd like to. And unfortunately, about 40% of the people that are buying food on credit cards are only paying the minimum on those balances, and about 27% or so are actually paying less than the minimum, which means those balances are increasing. And with the high interest rates we have, being up in the 20s, 25, 30% in some cases on those credit cards, those things are growing like crazy. Now, company profits, which are ultimately what affect stocks, are actually pretty good because there's been so much downsizing over the last few years. So the beginning of this year, company profits were up about 5.5% over the prior year. So we're looking at this saying, well, company profits are good, but people are spending money on credit cards and getting really strapped. So the question is, the concern is, when does the balance shift? When do people start looking at their computer, looking at their Amazon purchases, looking at those things they want to buy, and then also looking at their credit card balances and their credit card bills and saying, you know what? I don't think we can spend any more here. We need to pay these down. And when that happens, there could be a shift in spending that could ultimately affect the bottom line of the corporations and ultimately the stocks. So I think for right now, for me, that's probably my biggest concern. Will rates come down soon enough to affect those credit card balances enough where people don't get themselves in so much trouble where they can't spend anymore and it doesn't hurt company profits? So that's kind of number one for me. Now, looking forward, there's still some optimism. We still think there's every reason to believe the markets could continue to go up. We still like where things are. We're still cautiously optimistic. We have a plan in place. That's what I'm looking at. Anybody can look at what they want to look at, but that's my biggest concern. Spending, credit card debt, how's that going to affect the economy? How's that going to affect people? How does that affect the markets? And we'll see how that plays out. So not a whole bunch of deep information here. Just wanted to, again, share something with you, let you know what I'm looking at, what I'm concerned about. We'll keep an eye on it. I'm watching it closely to see how spending and profitability of corporations and companies and publicly traded companies coincide and how they work. And if we need to make some changes or do anything, we will. But in the meantime, we still think we're looking good. Probably no huge gains like we've had over the last couple of years since we came out of the 22 crash, but still some positive stuff that's expected. So keep you posted, let you know what's going on in early July. And in the meantime, if you have any questions, concerns, or anything else, as always, please give me a call. And if you think there's anybody who could benefit from this, share it. If you think there's anybody that you know that I can help, let me know. I'll be happy to do what I can. So have a great summer. Have a great rest of June, and I will talk to you soon. Have a great one.